Is we live or is we live? Huh? Is we live or is we live? Welcome everybody to another episode of Cheef and Chart, man. It's your man Don Bucks. And this is sponsored by Rap and Dell, the home of money conversations. Man, oh man. Yo, this is episode Cookie Glue, man. Episode Cookie Glue. Why? Because that's what I'm chiefing. ASO. All right, y'all know I've been talking about ASO. I don't know what's up with my sound effects. My sound effects hating today. But listen, this is not financial advice. I am not a financial advisor. This is for entertainment and educational purposes only. And who am I to talk about stocks and charts and smoke weed? This is the first show ever. Like it. You dig? I can't wait till I get these sound effects popping, man. But check it. ASO. I know I've been trading ASO for the past 2 weeks since the premiere of this show. ASO been doing something interesting on the charts, man. I can't wait to get in these charts. As a matter of fact, let's get into it. Let's get into the chart, shall we? Shall we? Let's get it. Let's get it. Boom. So, yesterday, if you was here, hit the notification bell, hit the like, hit the subscribe button, send this out to any options traders, any investors out there that don't know what they're doing with the chart necessarily, right? So let's look at the SPY, because yesterday I said, what did I say yesterday? I said we was going to bounce yesterday, didn't I? Yep, I said we was going to bounce to a resistance line and come back down. And that's exactly what we did. And let me preface that like I always do. You're not going to always be right. And that's okay. It's okay not to be right, because the market is going to do what it want to do when it want to do it. Is hundreds of thousands, if not millions of other people looking at those same time frames you're looking at. So anything can happen at any time. But over the course of things, there's some predictability within the charts and within the markets. But you always have to keep in mind and keep that slight margin of error for the unpredictable. So what happened yesterday was it was a little mixed bag, because I said it was going to bounce, and it bounced. It fell, it dropped and bounced. And it looks like let me make this bigger. So this is the hourly. Let me go back to the daily time frame. So if y'all can see that we're on a downtrend, and yeah, we're on a downtrend. So I was looking for reasons to do puts, right? So go to my trading time frame, which is the hourly. And why do I like the hourly? Just in case this is your first time tuning in, I like the hourly because I'm a swing trader. I don't day trade. I like to swing from day to day or from day to a couple days out, take my profits and move on. And the support and resistance levels within the hourly tend to respect that time frame that I'm looking to trade. So that's why I like to use my hourly as my trading time frame. So on my hourly time frame, I'll draw my levels. Now this looks a little um, confusing. So let me remove everything. And what you see here is the Bollinger Bands. Let me remove those. All right, so now all we have is bars, right? So if we're on a downtrend, let's draw a trend line on our downtrend. On a downtrend, actually, you know what? Let me draw that on the daily. That's what I thought I was doing. Let's draw it on a daily. And then we're gonna move to our trading time frame. So downtrend clearly, right? This is the SPY. Let's draw some levels on this too. So at least we know what the major trend is. I like that idea, don't you? We know what the major trend is and we know where the major levels are. So this looks like it's tedious work, but this is how you print money, right? You got line out again. That's the only thing I don't like about this. You gotta keep going to the thing. Let's see. It's not keep going to the journal. Where else we got a level at? Here. Should be having you looking like a mad scientist up in this joint. But this is what we doing. This is what we doing. So this is the daily levels. Up here. Drop again. So this is a level 2. Some of them jaws be trying to sneak in there, man. You gotta sniff them out. Gotta sniff them jaws out, man. So I peeped it, went up and stopped right here. Let's see. Boom. So that's the long-term levels on the SPY. And it looks like it wants to continue. So let's look at the daily, the hourly. So the levels on the daily and the levels on your trading time frame are going to be different. Well, why I drew those levels on the daily so I can know what the long term trend is, because usually the long term trend or the long term levels hold more weight than the shorter term levels. So even though you're on your trading time frame and you are trading in those, you still want to know what direction your play could possibly go in to the extreme. Excuse me. So those are long-term levels. So now we're on the hourly. This is if you were trading the SPY. So if you was trading the SPY, this would be your level. On the SPY. Boom. As you can see, it's rejecting at that level. Then we got skinny level in here. All right. This is the shorter term levels. These are the ones that are my levels in my trading time frame. So I think it's going to reject tomorrow. That's what I see. Because, excuse me, even on the daily, it's approaching a resistance level. So it may rally a little bit, but I believe it's going to fall. So looking at my play, ASO, I see that the overall market wants to rally a little on the daily. So that gives me some conviction that my play wants to rally a little bit as well. What is ASO? ASO. So if you was here yesterday, and if you haven't already, hit that subscribe, hit that notification bell so y'all know when I'm going live doing this. Now, I told y'all in my course, and I tell y'all over and over again, if you just starting out trading options, all you need to master is one stock. One stock. You ain't got to be all over the place following these call out groups. If you know what this chart is doing and you know how to use all these elements in tandem, you'll be good, because no one's 100% right. This is a probability game. So as long as we're doing everything we're supposed to do, if the market goes against us, we just have to cut our losses and move on to the next play. You didn't necessarily do anything wrong. You may have, because I did something wrong the other day. Like right here, a couple days ago. Let's make this bigger. A couple days ago, when I seen it was rallying, and I seen, instead of doing a put at this resistance level, when I seen this pin bar, after all this rallying, I seen this pin bar at this resistance, and I did a call when I should have did a put, because when you see rally, it has to retrace, especially at a resistance level. And it was a pin bar. Pin bar meaning price went up here and then sold, because on candles, you know, the wicks, the skinny part are the wicks. So the top is the high on the green candle. The top is the high, the bottom is the low, and the middle part, see how small it is? If it was bigger, that means it closed near the high, right? Because the bottom is where it opens, the top is where it closes. On the wick, the bottom is the low, the top is the high. So when you seen this wick, the high was at resistance, but it sold off and it came back off of that resistance. So when you see those pin bars like that at a resistance or at a support, that means it's bouncing off of it. And lo and behold, boom. So I was on the wrong side of this trade, but I stayed in it to the next day and it bounced and I took profit. But yesterday, and this is what it did. This is what it did. It did this yesterday, and I was happy because I did a call right here when it bounced. It bounced off of here, and I was taking the risk that it was going to bust through here. That was my edge. I was saying, it's been bouncing off of this for a minute. It's about time for it to bust through. Lo and behold, I did a call on this bounce right here. Look, see that pin bar right there? Another pin bar at support. So I said, you know what? I'm about to do a call right here. Lo and behold, it did this yesterday. So I said, it's going to have some continuation into tomorrow, which is today. And it did this first thing in the morning. But if I didn't have this level drawn here, I wouldn't have had a place of reference to say if I'm getting out of this play or not. But I had this level drawn here, and I said, you know what? This is a support level. And look, a pin bar at support. Pin bar at support. So I stayed in the play. And shout out to having time on your contracts, fam. Man, where's my sound effects? Shout out to having time on your contracts, because if I had a little 3-day expiration, I probably would have been trying to get out of the play, taking a loss on it. Feel me? So I was down when it did this, when it dropped down here this morning, I was down. But now I'm only down maybe 10% or something like that. So I'm looking for this to bounce tomorrow, and I should be slightly in the profit when it bounces. All you need is one stock. Learn your one stock. You gotta hit that like and subscribe button. This is ASO that I'm running with. You know what I'm saying? Contracts are cheap. All the people that want to know how much it costs to get started, these contracts are super cheap. Like, depending on your expiration date, like a 9-day expiration date contract's about $60, $70. So, if that's your risk appetite, go for it. But that's the object. Find your risk appetite that you can emotionally risk and lose and not be, bent out of shape about those type of contracts you need to look for. If you want to find contracts of dope companies that are cheap, go check out magicformulainvesting.com. That website was put together by a dope investor named Joel Greenblatt. He wrote the book called Little Book That Beats the Market. Pretty dope book. Go check that out. But like I said, hit that notification bell for when I go live. And I'll see y'all tomorrow. Another episode of Chart and Cheef, Cheef and Chart. Whatever one you want to call it. I'll see y'all tomorrow.